Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, so let's take a look again on the gold market. As you can see, markets across the board relaxing a bit, getting the relief and breaking the nervousness. So you can see the reaction stance actually on the crude oil as well, on the stock market, and everywhere. So and the gold is not an exception. So yesterday we said that once market hits the all predefined targets, we expect proper downside retracement. And actually market has completed the predefined levels. We said yesterday it should be around 1980, which is seems absolutely logical in the current situation. So probably this level we do not need anymore. At the same time, you could see that overall shape that market has formed, and this is huge bearish engulfing pattern. Supposedly, this pattern leads market later to more extended retracement. So once the first leg is done, here we could get some minor upper bounce. This is actually potential the brand bud that we discussed. And then it could keep going lower. So maybe it will show some deeper ABCD retracement. This is possible. At least this is, in most cases, happens when the market forms the engulfing pattern, especially when it's then so extended. So currently the question about the brand bud that we discussed recently. Theoretically, it should start somewhere from this point, because intraday XOP is done. Unfortunately, we haven't got the close below the 3x3, as usually we need to get when we deal with the brand budders. But still, it's not really very important detail. So it would be better to get it, but it's not absolutely necessary. So more important is just to see what will happen on the lower time frames and how market will show the reaction. So on the hourly chart, let's take a look what has happened. That was our predefined XOP. Here was no wash and rinse that we have suggested. We talked about this, so we warned you that it might happen, but fortunately or unfortunately, but market hasn't washed out the top and just started dropping. As a result, we've got the XOP pattern right here, and in fact, which makes an agreement with the 1973, 1978. This is XOP forming the butterfly, which potentially bullish reversal pattern, and theoretically, that might be enough for starting the pullback to the 618 level, which will be approximately 2030. 618 resistance on the whole downward direction. But the one thing that I personally do not like here, it's feel a bit uncomfortable, is the reaction on the XOP. So we do not have real straightforward appearing of some pattern in upward direction. Market hits the XOP, showing some pullback, then trying to move slightly lower, completion the butterflies 1967 of this. Now it's also not very impressive type of action. It makes me think that maybe market could try to slip to 1957. So this is, I can't exclude this chance. And if this will happen, that will be not bad area to consider for taking the long position. Why? Because here's first of all market completes the target, but what's more important is if we'll take a look at the daily chart, we have the confluence 51-59. It's rather strong, and it will be accompanied by their daily oversold area. So this will be relatively safe area where that should trigger the response of the market that makes entry process not very risky. So actually it's kind of I wouldn't say it's a riskless trade, but it has a very small degree of the risk, because chances of the at least minor technical response of this level are very high. So, and from that standpoint, if you're conservative, you're not sure, it would be better to wait. Just if you miss the trade, well, that's no problem. There's lots of other trades right around the corner. But if you are correct and taking the position at the 58 with the XOP here, sorry, 1957, with this butterfly completion. It will be really great trades just because you will place very tight stop, and you will get great chances on the pullback. So this will be very good. Alternatively, you could also keep open mind for possible market reaction. So for instance, within the session or today, tomorrow, if we will get here the clear reversal pattern, so markets, for example, starts to form hand and shoulders, of course we will not waiting for 57. We will be just considering taking the long position right here with the pattern, because currently, well, we have something, but for me it's not enough. I think that we need more context for taking the position. So that's two moments that probably we should keep an eye on. Sooner rather than later, this pullback will happen. It's just a question from what level, either right from here or market will move slightly lower to 1957. And just keep an eye on the patterns. So if we get any pattern, that might be the final part of the puzzle for taking the short-term bullish position.